If you're on YouTube right now, please subscribe to the channel so you don't miss any future episodes. And drop a like and a comment. Thank you. All right, guys. So today we're here with the Holyfields. So we got Mr. Mark and Miss Courtney Holyfield with Citizens Progressive Bank. So a local bank,
Yes.
with a local feel.
Amen.
You guys have been in the real estate side of the business for many years, producing home loans, and we're able to do some things that others are not. I know that, and we'll dive in a little bit deeper, but you guys have the packages that everybody else can have. I mean, you can go and get your FHA, your conventional loan, but there's also some specialty things that you guys have to offer. So one thing I want to point out to general public is that although these guys here can put forth many loan packages that everybody else can do, it's not always about the things you can do for them. It's about how you do it.
Right.
Who you work with. I'm a very big proponent of who you work with matters.
I agree.
We have, just like you guys, have a lot of different relationships, a lot of different real estate agents, and then your client base. I think you'll agree with me. Your reputation in this business really matters on how you can deliver your goods and services to people and how you're able to take care of them. Even if you're offering the same stinking thing as the next person,
Right.
Experience matters.
Absolutely.
It does.
I've can tell you countless times how I've had customers that have used these big national banks and thinking they're saving a ton of money or whatever the case may be. Not only were told that they couldn't do what they want to do, but when we finally get them convinced, let's use somebody local, they were able to get done what needed to get done and was able to get it done cheaper, right?
Right. And quicker usually.
Yeah, absolutely, and more painless.
Yes.
Right. You know, nobody wants to be involved in a stressful environment, and real estate can go from zero to, oh my word, I'm about to pull out my real estate agent's hair, in a matter of seconds. So,
Right.
who you work with matters. So, guys, appreciate y'all coming. Sit down with me today. We were at I think a NAR event, a little local NAR legislative event, and we were just chatting it up a little bit.
Right.
And you're like, hey, let's get together and do a podcast and talk a little bit about what's going on. So
We're glad to be here.
yeah, we're here today, and so let's kick this thing off. So I'm going to start off with something that a lot of lenders hate me saying. So hopefully you're not going to beat me up too bad. When we're talking about, and there's a lot of different topics we're going to cover today, but when we're talking about fees, we're talking about what each individual lender brings to the table. I'm all about a fifth grade level when I talk to folks, and that's most times so I can actually understand. It's not about the person across from me. I like to keep things simple. So I tell my customers when I'm introducing them to preparing for their finances, how much money they're going to need, I say, well, here's the reason why I love to use local bankers. Call y'all guys bankers, even though you're not
Right.
necessarily a banker, but I'm rolling y'all that one big lump sum.
We get that all the time.
It's okay.
I said there's two ways a banker makes money when it comes to mortgages. Either it's going to be on the fees on the front end, or it's going to be on the rate on the back end. And I know I'm oversimplifying things, but I said a good banker, a good lender is going to sit there and give you options based on your situation, your cash flow, what you're trying to achieve. They're going to move that rate and those fees and balance it out to a point that's going to be beneficial to you.
Right.
Now, I know that's oversimplifying. There's like a lot of other moving pieces, but is that basically a true statement?
Yes, and we went to a flat fee for our service years ago. Whether it's a $500,000 loan or a $50,000 loan, there's just one flat fee. And so we just felt like for fair lending purposes that was the best way to go. A lot of places might still do the 1% origination where, if the loan's bigger, then you make more money. But that's we're still doing the same service. We're still doing
Sure.
the same process. So we felt like a flat fee was a better fit. How secondary market loans work is that they're originated, of course, in our community bank, and then the servicing is sold. So that's how we get to make what we need to make as far as profitability, and it's fixed, like it doesn't change per deal and all that, because that's not fair either. You know, we
Sure.
want to make sure that everything is fair.
But let
And
me
it's
ask
called a service release premium.
let me ask you this: when we talk about lender credits at that point, that's kind of the. I wish that there was like a simplification of terms in real estate that we use. It's like when you go to a title company. I mean, they all use different terms to have their different fees in a different pot, and if we all just kind of spoke the same language,
A lender credit means a higher rate.
That's
because
correct.
they're not
That's right.
giving you money.
that's correct. That's kind of what I'm getting at when it comes to they can give you a credit to reduce your fees,
Yeah.
but you're getting a higher rate
Correct.
at that
Right,
point to
absolutely.
be able to.
And
to
you
be
have
able
to see what's best for the customer, because sometimes the payment is not their problem. They can make the payment. It's the out of pocket
That's
due to the
correct.
way that things are now. So really, it's very personal with that specific client, what their needs are. And then, yes, we can raise and lower based on that need.
And that's the point that I'm trying to get to the marketplace. Why using a local lender is so stinking important.
Yes.
Is that you guys will sit down and listen to what their situation is, and every situation is different.
Absolutely.
Yes, I would say every loan is different.
And then to be able to present them with a list of options, there's not like if you get to a point to where you're just boilerplate option A or option B, or this is what we're serving, we're not doing a really good job servicing the local population. We got to give people options so they can make the right decision. Would you agree with that?
I do, and the thing about it is that we run up against these a lot of online borrowers, and you just don't get the same thing. First of all, we want to keep things in our community. You talk about being in community.
Yeah.
Why would you want to send your money to somebody that's working out of New Jersey? You
Right.
know, we want that. We want to keep those funds here. We have great lenders here. We're not the only ones. There should be a big push for all of us as a community of real estate agents and lenders to keep our money here local. That's a really big deal for us. But I always say, you know, if you're buying a home, just like with a real estate agent, you wouldn't want to deal with a real estate agent from Arkansas to buy your home here in Louisiana.
Yeah, absolutely.
They don't know the market.
They don't know the market.
And like you said about that sometimes your people want to pull your hair out. Well, I always tell folks, you want to sit in front of somebody. If you need to put your hands on Mark Holyfield, you got a place to come to.
Right.
You're not driving anywhere else. You can come and put yourself in front of me, and we can work out our deal.
You know, we got one of the largest data centers in the world being built in our backyard here in
Yeah.
Richland Parish, and it's AI driven. And sitting in those meetings talking about, you know, where the world is going to, where, you know, so many jobs are going to be lost due to AI. And I can tell you that there's some jobs that'll never be lost, and that's when it comes to sitting in front of somebody to get complicated information explained to you in a way that you can easily digest it to make the best decision for your family. So I get asked all the time, Brian, do you think that your job is ever going to go away? Maybe, but not in my lifetime.
Right.
I looked it
agree.
up myself recently. I was like, you know, how does AI affect mortgage lenders? And it spit out that it won't, because you're still going to have, because everything is so different and everything is so specific to that person,
Right.
that we're not going to be obsolete
You're
for
gonna
now, like you said, in our
You're
lifetime.
going to always have a select group of people who are going to want to hit a button and automate as much of their life as they possibly can. And you know what?
Agreed.
That's okay. We need people like that in our economy. But man, the amount of conversations that I have on a weekly and daily basis with my customers, that you can't automate that stuff.
No,
I
you
mean, you
can't.
can't automate the feelings that go into making the decision of purchasing a house, or am I making the right financial decision of going with an FHA loan versus going to a conventional loan, or should I buy an existing house? Should I go with a construction loan, do something brand new? And
Right.
And it takes a collective group a lot of times to help figure that out. So I guess I'm reinforcing so much the personal aspect. I'm going to give my broker some credit here. So I've been in business since 2006, and the younger version of me was a hard charger, technology. It's all the latest. I want the
Right.
nice, the new, and we're going to be so tech savvy with everything. It's going to be great. And when I got in the business, where we're still taking digital photos on the 3.5-inch floppy disk with fisheye camera lenses and all that stuff, and no one had ever heard of a electronic signature before. But when I come up through the ranks and I'm seeing how what it means to be local and what it means to have that connection with the consumer. My broker, John Ray, helped me to understand early on that this is a relationship business, and
it is.
You can't operate at a high level and be effective with people if you're not willing to focus on that relationship. And I don't care what kind of technology you throw at things. If you don't make it about the person, you make it about yourself or about other things, you're not going to be successful.
I agree with that.
Well, and the technology that we have, it's more for the ease of the customer, not the disconnect from the customer. Like we want to, we can do a transaction and never lay eyes on the person. It's funny now since COVID, when someone walks in our building, we're so excited because we're like, a face-to-face customer.
I miss those days.
I know,
I really
like
do.
Before COVID, we literally had one customer after another sitting down in front of us, doing their paperwork, signing their documents. Everything was like that.
And there were explanations, and that's something that is lost. And you said this earlier. You talked about being very simple. Case in point, I had a gentleman. I think he had looked online, and he got to me. And after we had our conversation, because to me, knowledge is power, and you want to keep things so simple that they can actually feel good about what they're doing. And after I explained everything to him, we talked about where his money was, what he needed to do, how we were going to try to help negotiate the contract if that's what we needed to do to make sure that we met his needs. I got an email, and it makes you feel so good because you really don't hear a lot of good things about mortgage lenders or real estates for that matter. Real estate is that matters a lot of times in a deal. But he sent me an email, and he said, I feel like we're where we're supposed to be, and I really appreciate you explaining everything because I understand what I'm doing. Mm-hmm. So education and knowledge in our business, especially when you're about to make the biggest purchase in your life, a lot of folks, is so important.
Well, and just because you can do a loan doesn't mean you should do a loan.
I mean, can you say that again?
Even though you can do a loan,
Amen.
you shouldn't. Like if someone, as far as our guidelines go, appear to fit the mold, but in conversation, I find out other issues in their life. Perhaps they have an ill child. Perhaps they're having to take care of an elderly parent. And then I can say, look, even though, yes, technically you qualify for this amount,
right,
I'm really afraid that you're not going to be successful, and I want you to be a successful homeowner. So let's look at this, and then, let's put some money aside. Yesterday, I had a conversation with a first-time home buyer, and I'm actually going to help her budget her life.
Yeah.
Because she says, I don't know what to do. And so I shared how Mark and I, we have separate accounts. We put money every paycheck in a home account, in a kid account, in a trip account, to where we never have an emergency because we have prepared. So I'm sharing that advice. I don't think a big box lender is going to take the time to sit down with a 23-year-old couple starting out in life and helping them budget to be a successful homeowner, to be a successful parent, a successful adult. And so I feel like that's where we really do contribute so much to the process, because we can offer additional services that we aren't getting paid for, but that is just the love of what we do and of people.
And for the people that come
in.
A couple came in yesterday. He's getting paid cash here, and the poor girl, she was like, well, I just don't know what to do. I said, well, look, let's get together tomorrow morning, and while you're not ready today, because you need to be at your job another 6 months, we will mark you out a plan.
Right.
And we're going to spend 45 minutes this morning when I've got other things on my desk to do to set this couple up so that they can do what they want to do, and that's to buy a home.
Yeah, and let me kind of break stuff down for those that are listening. And this is my experience, and I know that my experience is going to vary from situation to situation. When you have a national company that they're out trying to hire as many people as they can, which, I mean, they've had to do some layoffs during the downturn, but at its peak, I mean, they were getting on new mortgage originators like, I mean, it was nobody's business.
With zero experience, their application.
Zero, and everybody's got to start from zero at some point.
True.
But I mean, there's a difference in starting from somewhere following a script or starting from somewhere following a leader that's going to train you the right way.
Right.
So many times I've taken people that have come from the big box lender, and the lender was telling them that they couldn't do something, and I'm able to bring them into someone local that has some experience. The rules are going to be pretty much the same. You're managing the Fannie Mae guidelines, right?
Right.
Yeah,
But it's
whatever agency.
But it's the interpretation of those rules or understanding all of the rules, not just
Right.
this section. There could be some subsections that
That's
will,
right.
but this also you need to apply here. If you don't have the experience, you just don't know.
And if you haven't been through it, you're right.
And that costs people a lot of money and a lot of time and a lot of pain because they're not giving good information. So
There's been so many times where an underwriter has said, you need XYZ. And I'm like, no, we don't. And, oh, well, I can't do this because it's. I said, yes, you can.
Right.
And then I go, because I'm a guideline guru.
Yes.
I know the guidelines backwards and forwards. And so many times, maybe because of where they worked, there's a thing called an overlay. So we have no overlays at Citizens Progressive Bank. If the agency will do it, we will do it, period. But I've worked for organizations where FHA may say yes, but their company has taken a
Right.
stance where they have an overlay. So when I created this department for Citizens, I'm going straight agency. And I have multiple investors, and I'm constantly looking for whatever we need or don't have. So if we find a need, then I go and I try to fill it.
That's right.
But people always need to get a second opinion, because if there's an overlay that place has that says, I don't do a 620 manufactured home, well, guess what? We do, because we have no overlay.
Yes, that's right.
So we
They
go
don't
straight by
necessarily
agency.
tell you
No, they
that-
just say can't
Right.
do it.
you just can't do it. So you think if you
That's
can't
right.
do it, everybody
Then
can't.
everybody
that's
can
correct,
do it.
yeah. I mean,
Exactly.
I mean, you brought up the word, mobile home. Back in 06, when I got into the business, you didn't touch as an agent. So number one, we can't sell a mobile home. We have to sell real property.
That's correct.
Correct.
And that mobile
And
home
we don't
has
finance.
to,
We don't
yeah.
finance real. Yeah.
yeah. So that mobile home has to be attached to a piece of dirt,
That is correct.
Yes.
And
immobilized before I can sell it, before you can put
that is correct.
a mortgage on it.
That's correct.
But at that time, I was taught that the only way that you can do something mobile home, somebody's got cash or a very large down payment.
Yeah.
That's right.
So we kind of, I wouldn't say ran from it, but it was like, oh, it's a mobile home, because we couldn't get financing on it.
Right.
How did you, I mean, you're known in our area for the guy who can make, which there's a lot more that are doing it now, but you were the innovator, at least in our art market, of being able to turn all these no's into all these yeses. How did you even get involved in that?
Well, that's a good question, and I want to back up and just expound a little bit upon what we talked about just a second ago. Is when Courtney says that she knows the guidelines, we've worked together since before 14. I used to watch her in action, and this lady, when I'm telling you she knows the guidelines, she knows them better than the underwriters. She probably knows
You
them
have
better
to
than
fight with them.
Oh my goodness. And I've heard some, but when she says that, I can vouch for that. There's not a person on this earth that probably I can think of right now that knows those guidelines like she does. And she makes deals happen for people that would have been kicked to the curb a long time ago. So props to Courtney for that. But the manufactured home deal, the way I actually came into it is back in those days, she had one of her LOs quit. And she said, well, I think it's time maybe you might want to kind of look at getting into this. Well, and here's what you're going to do. We're going to get into the manufactured home business, because at the time we were working with, was it Westar?
Yeah, we were working with Westar, and
And
they
they had a
actually did
division.
have a division for it.
And I thought I was going to starve to death. When you would go to the listings and look for manufactured homes, they were listed nowhere. And I'm like, oh my goodness, how am I going to survive? How am I going to make it in this business? Well, what you do is you put your head down and you learn. So we learned, oh my gosh, I learned so much about manufactured homes, how to take a trailer is what they call them. They call it a trailer because that's what it is. It's a vehicle. How to turn that trailer into a manufactured home through active immobilization, making sure the foundation was correct. So for the first 2 or 3 years, from 14, 15, and 16, it was crazy. It was a struggle. it took so long to get one done.
Yeah, it was.
By 18, we were rocking and rolling and still learning our problem. Flood insurance and being in a flood zone is another huge thing. So we went from doing on-site manufactured homes that are already built and existing that people couldn't get rid of. We were doing them left and right. We had phone calls coming, helping people not only that wanted to sell them, but then also putting people that could afford a $90,000 home into a home like that. There are a lot of misnomers and
Yeah, like that they depreciate. That is such a myth. They appreciate just like real estate.
Just like
now.
real
It is
estate.
not the same.
so there's a
So I'll say on that one, I will agree with you, but it's only since they've made some changes to the quality
Yeah,
of
they're
them.
built
That's
better
true.
for sure.
That is correct.
Absolutely.
That is
They're
absolutely
beautiful.
true.
Yeah, I mean, and I saw one listed the other day for almost $400,000.
Yes, we've
Absolutely.
done some modulars
I've
that
done
big,
a-
yeah.
I think the largest one I did was right at 400 on 30.
But that
20
same
acres.
house, when you call it quote unquote stick built, would be 600,000.
That's right.
You know?
Sure.
Yeah.
Yeah, you can knock about $100,000 off the price tag of a home, same square footage and all, with a manufactured home, and they are building it better. Nowadays they have to build, whether it's a single wide or otherwise, they have to build that home to the codes of whatever parish or whatever area it's going to be in. If you upgrade to a modular, then they beef everything up. Instead of 2x6s, you're looking at 2x8s for your floor joists. Instead of 2x4s, you're looking at 2x6s for your exterior
And we treat
walls.
those as stick built, the
Yeah.
modulars.
Correct.
As far
So
as rate and
there's
stuff.
so much information out there on manufactured homes, and I was fortunate enough to be able to come into the business when it was something new. And I'm even though so many people are in my area now, it has really opened up an affordable option for folks that have been pushed out of that 125, 130 range.
Yeah, not only that, but I think you brought something to the marketplace that others been able to take advantage of.
Right.
Yes, we would love a thank you note.
You know, but it has to be rewarding to be able to see that, you know,
It is.
you were on the ground floor of that, really starting it and opening up that channel that others are able. You blaze the trail for others to kind of be able to walk behind. And I don't know that many people understand that, but you were a trailblazer and during that time
Because
of
we
being able to
wouldn't
make it
touch
happen.
them. I'm telling you, as
I
a
never
lender,
really
we
looked
would
at
not
it that
touch 'em.
way. It was something that I began to enjoy doing it and
Yeah, so we do
I never
new
really-
build manufactured homes where you can purchase the home and the land, and then
We
we
do that
put
as
it
well.
together.
That's right.
That's an in-house product, and then we can do the construction loan with our bank. That's what's so great about being involved with a community bank.
Yeah, so dive into me kind of dive into me, but just dive into the process of what separates what you guys do from what a lot can't do because you have a community bank that supports you.
Right. So having the community bank allows us to say yes so much more. If we only were relying on the secondary market piece, then we would also be just the vanilla lender like all the others. But having this community bank relationship allows us to do the fixer-upper homes because there are products out there that FHA has or VA, but they're a nightmare.
Yeah, oh my gosh.
You can't get a lender to do them. We tried to do 2 back in the day, and it took like 6 months, and we were all exhausted. So what I did is I took that premise of those loans, and I said, we're going to do that on
Create
our
own
bank
product.
side.
That's right.
And so what we do is we get the client approved for the long-term financing first. And then with that approval, we call it a takeout. Then we're able to go into our in-house bank and say, hey, I need to park this here for a couple months. They're going to buy the land. They're going to put the mobile home on it, or they're going to buy this property. They're going to fix it up. And then we're going to pay this in-house bank loan off with their permanent loan.
That's right.
And so,
So so what you're telling me is you're able to qualify them for both at one time?
correct.
Absolutely. So yeah. So when someone comes in to do our land home package, whether that be I call them all land home packages, whether it be new construction or whether it be a manufactured land home product, or if they found their dream home but it needs $20,000, $30,000, $50,000, $60,000 worth of work, we come in and we take it that they're going to bring us. If they're buying land, they're going to bring us a contract on the land, and they're going to bring us the contract on what it's going to cost to build it. We put that information together with the closing costs and all the other things that roll into it, and that is our purchase price. And we treat that initial approval just like we would treat a house that's already built and on the ground. We produce that letter, we present it to our bank, and we present the client to the bank. Our bank gives us the money to fund the purchase of the land, the construction of the home, or the manufactured home, or the renovation cost, and then they approve their own loan. So that's 2 loans that you're doing. You pay a small fee; it's worth it in a lot of cases.
Sure.
Yeah.
A flat fee and then some interest along the way, but you're able to build your new home, whether it be manufactured or whether you're building from the
You can
ground
do it
up,
all at the same place.
all at the same place.
And we do everything and then package it up, so it's a very easy process for the in-house piece.
Yeah.
But also, and you know this from being a realtor, if you're buying a bank-owned property, they will not do one
Oh, my
thing to that
goodness, it's a
property. If it
nightmare.
needs a new roof or it needs an AC or something, we can take that, park it in the bank, have time to fix it to where these young borrowers or these borrowers that may not necessarily have the money to go in and fix these things can buy that fixer-upper.
Because we lost a whole segment of our market back in the glory days when rates were 4.5 and insurance was
Affordable.
Right, yeah.
I mean,
crazy.
when we used to put $75 in for insurance, today we're putting in $175 in the section for insurance. And when rates went up so quickly, it knocked out a huge, where you used to could get a $100,000 home for $700 a month or $735. Now you're at $1,100.
Yeah.
I mean, took a huge market of people out of the market. And so, and then when you're looking at homes, and you know this, or you can correct me if I'm wrong, how difficult is it to find a house for $175,000 to $100,000
It's like
that's
a needle
worth
in a
having?
haystack.
Yeah, I mean, it's just
It's
not
impossible.
possible. But now knowing, our in Northeast Louisiana, we have a very big aging home population.
Right.
Our stock is way older. We don't have a lot of production builders that are building a lot of new construction.
Right.
So now knowing that you guys have an easy process, that 2 or 3K loan, I've done
Oh, it's
one.
horrible.
Oh my gosh, I did one too.
The
can't do
red tape and just the qualification they make you jump through. I mean, the premise of it was wonderful. I mean, the thought process was
Right.
great.
FHA can complicate so
Man,
much.
that's you get our federal government involved in something, and it's
Well,
like
and just what they
crazy.
put the contractor through. I actually had a client 2 days ago. He was working with a big box lender, and he called me saying, I just wanted to buy this house, get $20,000 to renovate it, and then put it, on the permanent loan. Well, what he was being proposed was a 203K. And he was talking to me about his contractor getting so frustrated. And I said, that's the problem, is they're trying to put you in that one-time close 203K, which is a nightmare. I got him disclosed same day. He already has gotten his approval through the bank, and we'll close in a couple of weeks.
And yeah, he's
where
ready
he
to
was
go.
still trying to get a 3-year resume on his contractor. We're local. We know the contractors. We can look them up. We know people in the area.
And
so it's
a
great.
lot of these smaller ones, I used to be a contractor and still am on my personal stuff. But we have contractors that, especially for the smaller jobs, we have folks that have purchased $50,000 homes, spent $20,000 on them, done them in 2 weeks, and are turning around and have a home that's worth $140,000.
It's a really good opportunity to have instant
It's a great
equity.
product. It
What,
really
what are
is.
some of the qualifications? Do you have to have a licensed contractor for every deal?
We do not do the whole self-work thing because people do not have experience.
Sure.
Right.
And it's more to protect them and us.
That's right.
If someone has like a father-in-law or something that's a paint contractor or something like that, or that has a good history of that kind of work. But are we going to let a little 25-year-old couple go knocking walls out and doing stuff?
Right.
No. We're going
It's
to protect them from themselves, and we do require a license.
Rare occasions.
Yeah, and I think that's important to have that as a discussion. You will have, the uninformed, it's not necessarily based on age. I can be a 40
Yeah,
something.
really,
Right,
you're
right,
right.
right. Absolutely.
Uninformed,
But just
think,
people
hey,
who don't have that experience.
yeah, well, they'll come in and say, well, this is a great loan option. I can do this myself.
I can do
just,
the work.
Yeah, I can do the work. I just need an extra $40K to make that happen.
That's where the knowledge base comes in when you have a connection with your client, because most of the folks that want to do what we're trying to do are younger, because they see it, it's a dream, it's something exciting
It's
to do.
affordable, yeah.
Right. But they want to do the work. And so even with my manufactured homes, because I have a lot of these guys that will come out and they will say, okay, well, look, I'm going to do my own dirt work. Well, then we have to have that conversation, because look, I know you want to do the dirt work. I know you think it's going to save you some money, but the amount of money that you're going to save, let's let somebody bid it. When it all comes down to it, they weren't going to save any money anyway. And then you're putting yourself at risk, because of
You don't
course,
do it right.
if you've done the foundation, then what have you nullified as far as a warranty is concerned?
They're going to have to come out and inspect that before
Exactly.
they place that home on it.
But you go back to a dealer and you say, "Hey, my house is falling on. My trailer is sinking on this. My manufactured home. We shouldn't call them a trailer because they're manufactured homes. My home is sinking on the right corner. Well, buddy, you did the dirt work, so I don't know what you're going to do about that.
Right.
So we try to, again, we're back to education.
Yeah, save it.
And I will say that Mark and I, in our younger days, rehabbed homes and flipped them. So we have a great working knowledge of where things can go awry.
Right.
And a money pit.
Oh,
and
my
so
goodness.
we're going to take our very long history of our own mistakes that we made.
And put it in front of folks. Yes.
And
it
let them know,
works.
don't do that.
Yeah, and look, in our industry, and I'm sure you as well. Sometimes we're accountants.
We're counselors.
We're counselors.
Oh,
We're married.
We're
Oh, my
well
goodness.
testers. We're septic inspectors.
We were having that conversation the other day about how often it is, or how emotional, I guess would be a better way of putting it, how emotional residential real estate
It
can
is very
actually
emotional.
It is.
be. Even for the unemotional, they think, I'm just as rock hard man. I'm just,
Oh my
I
goodness.
mean, you can see the emotions come out. I mean, it
Absolutely.
can be a roller coaster.
And we
it's-
try to protect people as much as we can. If
Sure.
people really got bothered as much as what we probably need to
my
bother them, they're like, "Oh my God, why do you need this? Why do you need this?" I'm like, "Look, I haven't asked you for the 30 other things that I went and found
I went and got those
myself."
myself. That's right.
We're
100%.
detectives.
Yes. Yes, absolutely. What would you say is if you could give some practical advice to either new people coming into the marketplace to look, or people that are coming into the marketplace that haven't been there in quite some time, that have lived in a house for 20 years, what's some practical advice you can give them in today's market of what they need to prepare themselves for?
Well, I would first say lender first,
I-
because for some reason we've gotten backwards, and I
Yep.
think it's probably Realtor.com and the Zillows. It's like used to it was lender then realtor. Now it's realtor then lender, and I mean, I would say definitely get pre-qualified.
That would be the first thing I would say. I
Like
agree.
people don't understand that. Oh well, I started my business 6 months ago. Okay, well then you can't buy a house, or you can at least on secondary, which is where our community bank comes in,
That's
and
right.
we can look at some other options.
That's right.
But the main thing is, don't do anything until you talk to a lender.
So how mad are you guys going to be if somebody comes to you 2 years before they're ready to do something?
Oh, we're
I
great.
know.
We love it when they come back and we're able to
That's
realize
right.
that dream
Absolutely.
with them. Yeah.
So you can help prepare and plan.
That's
for,
right.
Totally.
I'm doing one this
Absolutely.
morning. As soon as we come out of here, we're going to prepare these two young people for what they make.
Yeah.
I'm actually going to pre-approve them for what they can get, which is going to be nothing. But at least they're going to have a plan going forward to know that in 6 months, if they do A, B, C, and D, we're set up.
Right.
We're not just here to catch the dollar today.
Correct.
We're as much of an educator, because look,
I started my career as a consumer educator.
it's
That was
it's
my whole
not
purpose.
always about how much money you can make. It's about it. When we talk about big on dreams and all this big on stuff, it really is important to us to. I don't want people to go through what I went through.
Yeah.
We want people to be able to own a home. It's a big deal. We love we're home people.
Yeah, we're big.
We
home
love
people,
our
so
home.
love
We
our
work
home.
on it. We plant our flowers and stuff. And if
That's
people,
our
if we can get someone to
resolute.
enjoy their home
Yeah.
as much as we enjoy ours, that's the dream.
Yeah.
That's where you want to be.
And I use that 2 years as a little bit of an exaggeration, but I think that, Courtney, you're 100% correct that we're in that generation of we want it and we want it right now. And
Oh, my
it's
goodness.
It's a me
It is.
type thing. And I'm not dogging the people that think like that, but I just need to. My message is I want people to understand that, look, if you can plan right, you can achieve a whole lot
Oh,
more.
absolutely.
I agree.
If you want, before you want to start looking at houses, let's go sit down and find
And
out
look
what
at it. That's right.
your buying power can be.
Right.
What's the difference between pre-qualification and pre-approval?
Well, for us, everyone is pre-approved because you're getting the loan officer that actually makes the decision.
That's right.
So pre-qual would be like the big box lenders where you tell them verbally what you make, and then they'll spit out a pre-qual letter in
And it's usually
2
a
minutes.
yes.
And it's not worth the paper it's
Not
written
worth
It's
the
not
paper.
worth the paper it's written on. So when there's a letter from us, we have done
We've already
a
done it.
lot of due
That's right.
diligence. We make sure that we try to find all the pitfalls early on in the process. We look at income because I will say since COVID, people say they work 40 hours a week.
Yeah.
But we get check stubs, and there is not one stub on there that has 40 hours.
Then it makes you variable.
And then you're variable,
That's
which
right.
then you have to have a 2-year history
That's right.
for, or you have to make a really good case. So,
That's right.
we do not take borrowers' information. We start our application, we do everything verbally, and then we send out a doc request. And I'm going to see, or we're going to see, at least the last year W-2 and your most
And your
recent
most
30 days
recent
check
pay
stubs.
stubs. Biggest downfall.
And we need a path of the funds to close.
That's right.
And we also do down payment assistance programs.
Right.
I have several options for that. So when a pre-approval means that I've viewed the document,
That's right.
and we have an in-house underwriter who literally works only for us. So if there's something that I have a question about or Mark has a question about,
We shoot it
we'll
to her.
shoot it to her.
That's right.
And we've already troubleshot that
Right.
before we ever send them out for a
Right.
contract.
That's important.
Our income's already calculated.
You're
Give
right.
me your tax return. She looks at everything.
Yeah.
So a couple of things I prepare people for. So I'm a firm believer in having in-office buyer's consultation. I want that buyer to be as well informed as they possibly can be for every pitfall. Now, depending on the customer, sometimes I'll have them sit with the lender before my consultation. Sometimes it's after. But one of the things I really stress to them is that I don't want to go out and show you a single home until we're pre-qualified.
Yes.
How does that work for you? How do you get people? Because you said you like to do an in-house, like a face-to-face, right?
Yeah.
How do you get people to come and sit
So
down with
easy.
you? Really?
It's so easy. You just say, hey, what time works good for you this week?
I'm going to try that.
And just what time works good for you? Because look, I'll explain to people that, look, this is the single largest investment that most people will ever make.
Yeah.
Single largest. I want to make sure I get to understand exactly what you're looking for and how I can best help your family. Because, there's so many people that when back up a little bit, new in the business, my phone, back up even further than that.
Your flip phone.
Yeah. Palm Pilot was
Right,
my first one. Got in. Palm Pilot had the style she'd
The
pull out and
pager.
everything. Yeah. I asked early on, because I had no sales experience getting into real estate, and I asked, I said, well, what's the biggest complaint you hear about real estate agents? Said they never answer phone. I can do that. So this day, I'm known for answering my phone.
That's
I mean,
great,
I'm not going to
yeah.
answer it now if we're in this meeting, but I answer my phone. I don't let it go to voicemail if I can answer it.
And please clear out the voicemail.
Yeah, I answer my calls. But the other thing is that I want people to be informed of what their experience is going to be. I've gotten over time really good at kind of doing my own pre-qualification, asking questions, kind of understand people's intent. But you will never understand someone's true intent until we can sit down and have a conversation. Mm-hmm. I want to know how I can help you, how I can truly help you. I break it down to some people like this. You ever went to a department store or on a car lot to buy a car lot, and that salesman comes up to you and you say, hey, can I help you with anything? Like, oh, I'm just looking. Mm-hmm. I'm just looking. It's that defense that we pull up.
Right.
But truth be told, if you would let your guard down enough to tell them exactly what you needed help with, they could save you time and money, right?
Agree.
So my goal is to bring someone in, break down that barrier and say, how can I truly help you? And I may not be the person that can actually help them what they're trying to achieve, and I'll let them know. And if I can direct them to someone else, I'll do that. Mm-hmm. But when you get someone in and truly figure out how you can help them, now we can have a conversation. And in that conversation, I will tell them, look, the last thing I want to do is to ever disappoint you. And if I take you out and start looking at homes now before we sat down with the lender, you may find the house of your dreams and like, this is the one we want. And then you go sit down and talk to that lender.
And they can't get it.
Well, even if they can't get it, what about this? What if you don't want to spend that much money?
A lot of times that's the issue.
There's a lot of people that can qualify for way more
Oh, yeah.
money
We do it all the
That's
time.
what I ask them. I'm
than
like,
what they want to actually
what do you
spend.
want your monthly payment to be?
That's right.
Yeah.
Because there's some people that they're going to spend every dime they have to get what they want to run with the Jones. You know what? We need those people in our economy.
That's right.
But we also have people that are like, I want to do more than just live in this house. I
Right.
want to
We
go
hear
on
that all
family
the time, too.
vacation
That's right.
and other things.
We like
So
to eat
Absolutely.
out. We like to do
sure,
things.
you can afford this,
But is that where you want to be?
but is that where you want to be?
That's
so
right.
I don't want to set you up, because if I show you that home and it's your dream home, I say, Brian, this is it. And they come sit down and talk to you, and I just disappointed them, and they say no to it. Everything else I show
It's
them
going to be.
is
It's
going to
gonna
be
be a
compared,
disappointment.
compared to
Yeah.
that property
I agree.
that they can't, that they don't want, either can't afford or don't want to have to pay for. So
Right.
I just did a disservice to them, their whole entire family.
Right.
And when you explain that to people, they start understanding
Right.
that I'm truly here to help them. Look, I don't care if it takes us 10 minutes or if it takes us 10 years. Well, I kind of care if it takes 10 years. If it takes 10 years, I'm doing something wrong.
There you go.
But I really want them to find the home that fits their family and their needs the very best.
And we're the same way about loans. We want
Yeah.
to find the loan that is going to fit them best. I guess I'm going to have to work a little harder, because it's very difficult for me to get someone to get in front of me.
Oh, yeah,
Even with
dude.
the application process.
I gotta just ask them.
I'm like, I'd like to take this over the phone. Well, we really don't have time right now. Can you just send it to me in an email? I'm like,
And we
okay.
can. I mean, we can
We
send
do.
a link and all of that.
Because you
but
get so much more information with the
you
conversation.
do. You really do.
Well, that conversation allows me, now that we've had the conversation, when I now start giving advice, because we had that conversation, we have a relationship.
That's right.
Right?
Absolutely.
We have a relationship at that point. With that relationship, my advice coming to you is going to be handled much different, because we have a relationship.
Right. It means more.
Versus if we're just handling over the telephone.
Right.
So
I agree.
If John Ray didn't teach me one thing and then I walk away, that man has taught me so much. But relationships matter.
They do. They really do.
Reputation matters.
I agree.
And how many times have y'all been in a situation where you send an email or a text and it was taken out of context?
I have to
right?
read mine a couple of times before I send, because I try to make sure, and I may add some extra happy words in there, because it's really hard to.
I've gotten to where I send voice
understand.
memos sometimes to certain people if I think it could be, when I say it's taken out,
Misconstrued, yeah.
I just want to make sure you hear my voice
Right.
coming in with this. But, relationships matter. So, leading up to this this interview that we're doing, we talked about a little bit about community bank's important. But a community bank wouldn't be a community bank if the bank wasn't rooted within the community.
Amen.
Right.
So Citizens Progressive seems to me like they have a desire to be an outreach within the community.
Yes.
You share a little bit of that with us?
Absolutely. So, yes, one of our logos or hashtags or whatever you want to call them, you can tell I'm not very technical, is big on community. And so, very high participation rate in so many organizations.
Oh, yes.
Just to name a few, NELA Food Bank, United Way, the Children's Coalition, CASA, the Council on Aging. They support the schools. I can't
Oh, my
even
goodness,
tell
how
you
many
how much
schools?
the schools are supported by our organization. And in fact, they even have where we get paid. It's called Give and Grow.
That's right, Give
and
and
you
Grow.
can take 8 hours and they will pay you and you can go serve your community.
That's
and
right.
I thought that was really special
Yeah.
and something different. They really promote us going out into the community and us being a part of the community. So
Yeah, the newsletters that we get that are in house. I mean, there's always a function going on, and we have banks. We have banks in all the like Winsboro, Rayville, they're all over the place, and the amount of time that they spend in those communities, whether it be
Yes.
with the school, with
Volunteer.
with the nursing homes and things like that.
A lot of money too. Like Citizens gives a good bit back to the community. They Caldwell Parish, which is where our home office is. I know that they've helped with the museum, different things like that. And again, sponsoring of schools. I know here locally, Wassman has been a big target for the bank to be able to do some outreach there. We do financial literacy for all the organizations. It's free for the public.
Right.
So if anyone ever wanted to do some financial education, we have someone from the bank that'll go to schools, that'll go to your organization,
That's right.
talk about identity theft, talk about credit. Of course, I'm always available to do home buyer seminars.
Right.
We've done those in the community.
We do a lot of credit counseling.
A lot of credit counseling.
Because those are, it's just like we talked about earlier. Those are future homeowners.
Yeah.
You're just getting them really, really early.
In our marketplace, we don't have big industry that's here. We don't have opportunity for people to make a significant change in an upward trajectory in their income. So if we have someone that has credit issues, it's like unless they're willing to put some hard work into fixing them,
That's
Yeah.
there's no easy solution. There's
That's right.
no, I'm going to go ahead and go to work for this company and get an increase. That'll be an extra $500 a month that I can go and get this taken care of, or I'll get a much bigger bonus here, and I can get this
Right.
$13,000 worth of student loan taken care of that I've been avoiding forever
Right.
at
Right.
this point. So we have a heavy rental market because we have a lot of
Right.
credit issues within our area. Now, hopefully, with new and bigger businesses moving to the area, some of that can actually change. But true change comes when people are willing to make sacrifice to
That's right.
fix it.
And behavior changes a lot of times.
Right.
And sometimes I have to be mama, and just say, I'm going to have to just be blunt and tell you it's a behavior. I said, I can see, when someone has a situation in their life that has caused an issue, it is clear.
Oh, you can see it on the credit report.
Yeah, you can see them,
It's crazy
trugging
how-
along, everything's good, and then wow, something happened. A death in the family, a loss of a job, a
Right.
sick child, whatever. And then, but you can see the hard work that they're doing
They
to try
get
to
where
get
they bring
back.
it back in.
And a lot of times people work on things that we do not find necessary to work on.
Right.
Yeah.
So that's a main thing.
Yeah, 100%. I'm glad you brought that up. So there's a lot of people that don't want to start working on their credit or try to seek help because of embarrassment.
Right.
Right.
And
So
Oh,
please
absolutely.
Let's
don't
throw
let that
that
be
out
a
on the
deterrent.
table.
Oh my
Yeah.
goodness! Let me give
We've
you some
seen it
advice
all.
about that. There, probably in our own personal lives, I'll speak for myself because back in the day, I wouldn't have shown my credit report to anyone.
Yeah.
But so I've been through it all. And that's another thing. I'm glad y'all brought this up because you get a lot of fear out there where the only way that you're going to learn anything or to see where you are, know what you need to do is to overcome that fear and just put it on the table.
Yep.
Because I'm not here to judge because I see credit reports. Mine used to probably look worse than most of those back in the day. Our job is to get a hold of that situation now, prepare you for what you need to do, and then you got to be willing to do it because anybody that walks into our office, anybody can walk in there and with a decent paying job can own a home.
Yep.
It's just how bad do you want it?
Yep. What are the steps you're willing to take
That's
to make
right.
that happen?
Absolutely.
And you brought up a good point that there's things that people are doing. They think they're helping themselves with their credit, but they're actually hurting themselves.
Right,
That's
because they
correct.
can bring something from the past into the present. Sometimes it's better to just leave that
Right.
stuff in the past.
And I
then-
always tell my folks that come in that are saying, "Well, my credit's not that great, but I got all this money coming in. I was going to do," and I said, "Just stop.
Hold on, let's
Just stop.
look. Yeah.
Before you do
It
one
takes
thing."
it's not there's not a clear path. It takes a professional looking at it
Absolutely.
to help you
That's right.
go from here to here.
Amen. So that
So-
would be a big, whoever's listening, if you think that you have credit problems, do not try to fix those yourself. And the best path is not always going to one of these credit repair folks. Those
they're charging you money that you could be using to pay down.
because
your debt.
I can do that for you. I can give you that analysis for free.
Yeah.
And so people have misnomers about, well, if I pay all of these collections off, then it doesn't work.
Not
that
if it
way.
hadn't reported in
It
2
doesn't
years.
work.
You know,
So
let's not bring
you could
that
be
back.
wasting money that you may need to be using for a down payment when that $2,000 you're about to pay something off is not going to do you a bit of good.
Yeah, it's not has zero effect on things.
Zero. So
I think that's important for people to truly understand. I don't care where you're at in your credit situation. Connecting with a professional to help give you advice, and even if you don't have bad credit, but you're trying to get over that hump from you're trugging in around 650, which we can get people finance
All
at
day long.
650 all day long, but we can get you a better rate if you're going to be in that 720 and above,
Absolutely.
right?
Yeah.
that's right.
So, and sometimes it's about coaching the people that don't have anything in collections. How can we get you from this 650 to this 720 or this
Absolutely.
800?
That's right.
To get more premium benefits.
And that's not to deter the folks that are in the 580s to the 620s, because while the thing that I run into a lot of times is it's hard to get a 580 done, but if there are certain circumstances there, we've done a few of those.
I'm doing a 584.
That's right.
I'm closing in a couple of weeks.
But it's all about circumstance, though, right?
It's about circumstances, but people would be surprised. They think that they're worse than they really are. And the good thing about those 580s and things of that nature is most of those are kind of in the lower price ranges of homes. They're not looking for a mansion or anything, so it makes it a little bit easier there as well when you're dealing with scores like that. So I would just tell people that don't be afraid to take that
don't
step.
Let fear be a deterrent.
Fear can keep you from doing a lot of things that you may be able to do, because a lot of people have misnomers about their credit score. And we've had people that have great jobs, good money, could buy a $200,000 home, but they got a 580 credit score. Well, it's not because they have bad credit.
$15 credit card bill late.
Yeah.
Yeah.
Or they just don't have it. They just don't believe in credit cards, and the only debt that they've had was from 100 years ago.
Yeah.
Well, there's ways to work around that. So lots of things that we can do to help people. Just don't be afraid.
Yeah. No, don't be afraid to come in, and it's nobody's sitting here judging you.
No.
Well, in my education, my degree's in social work, so therefore, I am very open. I can counsel. I love that aspect of my job. It makes me feel good for somebody to have a plan walking out of my office. Mark's degree's in nursing, so we're nurturing people.
I used to be a registered nurse.
Yeah, so I mean, we're healers, we're nurturers.
So back in the
it's
day,
just a way to use it in finances.
That's funny, because back in the day when I was a registered nurse, I worked in a rehab facility. So in a rehab facility, you would come in for 30 days and when I say rehab, I'm talking hips and strokes and all that.
Mm-hmm.
Well, you're in for 30 days. We patch you up, we polish, we make you better, and then you
Same
go back
thing.
out. So I do the same thing now. We take about 30 days, polish people up, fix them up, get them into a home. Same thing. So.
And it's great, honestly, when we give someone a plan and then, 9 months later, you'll get that call. Do you remember me? And I'm like, yes, I do. What's going on? And they're ready. It's great.
Let's talk a little bit about the mortgage lottery that a lot of people hit, going through COVID, that got the 3%, the 4%. I've got
we
a
have
friend
2.25.
Yeah, got the 2.7.
Oh my goodness, it was crazy.
Yeah. Those are gone.
Those are gone, and I don't know that I'll ever see them in my lifetime.
I don't think we will.
Not in our lifetime.
I hope we don't, because what happened, 30 million jobs got lost in about 2 weeks for that to happen. So we don't want that again.
No, we don't want that to happen. But I mean, even outside of that, rates should have never really hit that low.
I agree.
Never.
They never
begin
should
with.
have. No.
And for those who have those rates, I mean,
Great,
kudos to you.
Absolutely.
But it's actually, the flip side of that, it's created social problems within our country.
I agree.
I've got, and I'm not going to call any names, but I've got a friend that was able to purchase a $500,000 house at 2.7%. That they went from probably a $270,000 home that was budgeted right for them and was able to get in a $500,000 home because of the rate.
Right.
And now you have their friends in their friend group that are doing good to be able to get into a $250,000 home.
Right.
It's like, why can't I have?
Right.
We get that all the time. Well, my cousin did this.
Why can't I have. I mean, my mortgage payment is this.
Right.
And a lot of times they sit and wait. Like over when rates started to creep up, people said, "Well, I'm going to wait till they go down."
Yeah.
If they had not waited, they would be in the fours, and then I'm going to wait. Then there was the fives.
Right.
I see now, and I don't know what's actually causing it, or if people just finally realize this is what it is. Now, I will say that rates have gotten a little bit better over the last month, and we're hoping it'll hold, and we're hoping that it will. When I say just millimeter by millimeter inch down, no one should use the word drop
Yeah.
in our
Right.
industry ever. Rates have dropped. Rates have never dropped in the last 2 years. They may inch a little bit down, and they go up a lot faster than they come down.
They do.
But I think people finally just got off the fence and said, if I'm ever going to own a home, and this is what I tell people, I'm like, this may not be your forever rate, but it's your right now rate. Now, you need to make your decision based on this is going to be it forever. But if rates do trickle down over the next couple of years, it is such an easy process to refinance.
All right.
Yeah.
Yeah.
Here's the thing I think people miss when it comes from a financial view. We have to stop. I know we need to look at monthly payment for budgeting purposes.
Right.
But if you spend so much time looking at your monthly payment on that rate, you're missing out on that flip side when it comes to appreciation on your home.
Sure,
Right.
it's your biggest investment.
If you are sitting on the sidelines because you have this 3% rate, and I'm not going to upgrade my home because I can't get rid of this.
Right.
Okay, but you're missing out on all that appreciation going from that $250,000 house, that $500,000 home. When you start talking appreciation, the more you in it, that number grows that much faster at that point. So for people sitting on the sidelines, I think that want to be in the marketplace, I think they're losing a lot of money because they're so focused
Focused on losing that.
they're focused on that rate number, and they're not focused on that appreciation factor that they have.
You got a point there. I never thought about that.
And think of all the appreciation that has happened over the last 2 years
Yeah.
in property that they missed.
Or you could look at all that appreciation that you got when you had that really low rate.
Right.
That now we call that equity.
Equity
That's
that
right.
you can put down on the
That
next
you can
one.
put down on the next
Exactly.
house
That's
to be able to
correct.
get that.
To get where you need to be.
You're so focused on one little number, you're
Right.
missing all of the opportunity with everything else that you got.
Rate
I
is
tell
a
that.
Go ahead.
I'm sorry. I tell that to people on PMI. Oh, I don't want PMI. I don't want PMI. I'm like, hang on, because it's really not that bad. And so when they hear the number, it's like then all of a sudden they're like, oh, well, I thought I had to have 20% down because of this
Oh, there's so many
wretched
misnomers out
PMI.
there.
And I'm
Right.
like, it's not that bad.
Right.
So it people do get focused and miss opportunities or won't try for something because they don't have this big down
Or-
payment.
Or they're being shamed by their friends saying, I don't know why you'd go out and get
Oh my God. Yeah.
a
That's right.
6.5% mortgage. I mean, you
Right,
got
you've
you
got
don't
a
let that-
3.
you got a 3.
Although the
Right.
house no longer is good for your family,
Yeah.
you've outgrown it.
Correct.
You
Right,
need more
right.
space.
And I think people are getting, the another bit of advice for the public. They talk about rate drops a lot, and people don't understand that rate drop is not in mortgage rates.
Right.
The Fed funds rate. Yeah, they
It is
always
a
think
Fed
it helps
funds
us.
rate.
It
So
actually makes it worse for us.
and a lot of times it does. So historically, if you look back over the history of mortgages, we probably should be somewhere between the 7s and the 8s
Yeah.
historically. We're still historically low. We just had a period of time where the economy and other factors in the world, COVID, the debacle in
Inflation.
2008, where everything really started and things started going down and the rates were so low. We had all of that where there was a 10 to 15 year period where we just had
low.
low rates. But look a little history before that. But there were times where there were 9 and 12s out there where people were buying houses.
Well, what's funny, I started in 2003, and we did Flex 100s all the time back in the day when they had this product. And it was 675, and nobody blinked.
Nobody blinked.
Yeah.
That's right.
Nobody cared. They were so happy to get that rate.
First mortgage I got on my house, I think in 98, I believe.
We were 98 on our first, 7.5.
Mine was 7.2.
Yeah.
No. I got 7 flat.
And
I was
we
at
were so
7 flat.
happy to get it.
Oh, yeah.
It was Progressive Bank. That was
wow.
I don't remember who it was at Progressive, but they did the origination on it, and that lady just kept stressing, it is a 30-year low. You are getting a 30-year low rate.
Right. That's right.
And at that
7%.
time, it was
And
true.
so those rates right now, where we're probably going to have some more Fed rate drops closer to the end of the year, but I would be willing to say, and based on what I've read and based on what you hear, that the 6 range between 6.875 and between 6.25, if we can even get there, we're there for a while.
Yeah.
We will be fortunate if we get back down into the low 5s.
We would love to see the 5s. I think that would. I think
that
that would
6
help
thing
people
is
get off the
but
fence.
But if you're waiting for a rate that's going to be in the low 5s, you're going to be sitting there a
It's gonna be a
long
long
time
time.
renting or living at home or doing whatever it is because
There's just
we're
no
where we need
economic
we're where we're supposed to be.
factor that is going to do what people don't understand, because it's just like it's not common knowledge about how all this works. There's just no economic factor that is going to quote unquote drop rates.
That's right.
Right. And when you see, you guys own some rental properties, right?
Yes, several.
The rates for rentals is going
up,
up.
up,
And
up.
if you're not
And
adjusting,
now that the Meta Center, oh my Lord, it's going to be insane.
so I just I'm not gonna call the name, but there's a local investor that's building nice duplexes, but 2-bedroom, 2-bath, small duplex. And that sucker's going for,
$1,800.
yeah, I mean,
know.
it's-
Yeah, I'm
It's crazy.
probably renting too low.
Yeah. Mark is so nice. He does.
I'm
rent
not nice. I'm just
lower.
trying to
like,
to
I
keep
think you could
I'm trying
rent
to
that
keep
for
my
more.
places. I'm trying to keep them
Keep
full,
full.
which they
Yeah.
do. But we have some good people. Again, we're back to the thing to where I know I got to make a living. I get that, but a lot of the folks that I rent to are people that they can't afford. I mean, if they could. If they can afford a $1,200 a month note, they'd be buying a house.
yeah.
Right.
So I try to lead some of those into home ownership.
And every now and then we do turn a renter into
That's what we do.
into a homeowner.
Another thing before we get away from it, it leaves my mind. 2 things that we were talking about when we were talking about rates that people need to understand. That everybody gets so rate conscious, and I think you were talking about this and about how we get focused on that one thing. Some people are note conscious about what their monthly is. Some people are rate conscious.
Or closing cost conscious.
Or
You kinda
closing
have to
cost
pick your
conscious.
poison.
Pick your poison. But you would be surprised on an average. What is the average home, Courtney?
Like 237 or something.
Right.
Would you say
Okay.
that? Yeah.
Yeah,
So-
240.
Yeah.
So you would be surprised when you talk to people about, people think that a quarter on an interest rate is huge. On a $500,000 house, yes. On 150,
It's not
you're
much.
not. Yeah, I mean, you're talking about $15-20.
Yeah.
So people, they get all, and when you explain that, that's why knowledge is power. Because if you understand that, then you're not so much rate focused, and you don't let that run you out of the market.
Right.
Same thing with people that want to come in and drop. That you have these young couples that come in. Well, I got $10,000. I'm worried about my note. I'm like, here we go. So the conversation starts. What is $10,000 going to do for you on this home? It's going to lower your note by $69 a month. What? That's it.
We would rather them have the money in the bank
$10,000
for an
is not going to make a
emergency.
huge difference monthly. Now, your transmission goes out in your truck,
Yeah.
You got an
and you got that
emergency.
$10,000 sitting in the bank, then that may be what
That
you need to
matters.
be thinking
Yeah.
about. So you'd be surprised.
So we talk about the balance of that,
That's right.
And we'll run the numbers. And that's another thing about taking the time with the customer. Okay, 5,000 extra, 5,000 extra. And then when they hear the number and they're like,
Right.
oh, well, wow, I think I'd rather have my 5,000 in the bank. I'm like, well, I would too, because I love money in the
Right.
bank. That makes me feel safe and secure.
Right. And it sets you up.
And
so,
you can pay $20 extra a month. It's
Yeah.
like the monthly is not a lot of people's problems. It's more of the cash
Yeah.
on hand.
Right.
Now, when something else I just kind of like to put out there for an educational purpose, when you have people that are shopping rates, I think it's important that they understand there's 2 rates that can be quoted. There's the traditional rate we see advertised on TV, but there's a thing called APR, and that's your equalizer. Would you agree with that?
Yeah, that is actually how you can compare.
Because
Yeah.
we can buy down that rate. We can get so many lender credits out there to make that rate
That's
look
right.
really, really, really
Then
good,
you have
right?
3.8% in points.
Yeah.
I could not believe.
Oh my goodness, yeah. So you
But
have to be
then-
very careful with
But
the low
that's
rates.
where that APR is, that equalizer.
It is.
That's right.
The APR allows you to look at that big box and then look at you guys and compare.
Right.
And if there's a big discrepancy between the two, well,
Then you
There's
know
your
who's
sign.
charging you all.
Well,
the
and
fees.
then we talk to folks about that. So the question is, when someone says a rate, because we're very competitive. We've gone up against Rocket, and actually
we usually win
Yeah.
when we go up against big
right
boxes
because they're talking about this great rate, and I'm gonna say, well, what are your discount points?
Yeah,
So-
I'm like, that sounds pretty low. Let me see what you're paying for it.
Because my total origination is $995, $235, and something else, and then depending on how much you're having to pay in discount points. Where if mine are $600 and theirs are $3,000, then well, shoot, I can give you the
I
same
can give
rate.
you the same thing if you want to pay $3,000.
That's right.
But I don't think it's a good idea at this point to pay a lot to buy down rates.
agree 100%
Yeah.
because what we know, our rates are a little more inflated than what they probably are going to end up being
Right.
within the next 5-year span.
And if you
Right.
refinance, then you have literally taken, and what we do is we say, okay,
Because that's prepaying your interest. That's all you're doing.
That's all you're doing. So let's say someone, paid $5,000 to buy down the rate. Well, I have to show them, okay, so you're going to save $30 a month, and it's going to take you 89 months to get
That's
your
right.
money back.
Yeah,
You're right.
If you
It's not worth it.
refinance in 2 years, you have saved nothing. You've actually given
that's correct.
money away.
Right.
And so we have to really look. If it's like a 24-month that you can get your money back, that's a really good indicator that maybe it's a good idea. But you have to remember, you're not going to save a nickel until you get your money back.
That's it.
And with our borrowers too, we encourage them that if they always ask, well, what happens in a year if rates come down? Okay, well, in a year if the rates come down, then it's got to be a benefit to you. But yes, we will work with you on the refinance.
And there's calculations. Like, first of all, if we do the refinance again, we're not going to charge our fee again.
That's right.
We
I
waive
wouldn't- I
that
would-
fee. You're our customer. We are not going to charge you
right.
for that.
So
we've already
she
done a
opened
lot
it
of
up for me
stuff.
so I can say what
Yeah.
I was going to say is that yes, when I have that question all the time. I had it yesterday. What happens if the rates comes down? Well, here's what we're willing to do. Since you've already paid us up front, if the rates get down, and it's a benefit to you
And we
because
do
we're
have
not
to
going to
look,
hit you
yeah.
again. If it's not, we'll do the calculations and make sure it's a good thing for you. Then we will refinance it free on our side. The only two things that you have to worry about are, number one, you have to pay for another appraisal, which is around $650.
Not on, I'm sorry to interject, not all programs require an appraisal
Well,
again.
for the most
but
part.
Sometimes, especially if you're going from program to program, because we
Right.
may want to switch you out.
So you could possibly, she has a point, you could possibly get out of that, but just for the sake of covering, the basis, your appraisal is what it's going to cost you, and then we go back to the same title company and they update title. So whatever that fee is, a year from now, 2 years from now, 3 years from now, if you've got a 6.875 and a 5.875 will help you, we will refinance it for free outside of those two fees.
And like back in 21, we refinanced everyone from 17 because 17 rates kind of went up. And then in 21, that's when they were at their lowest.
Right.
So we go back to the title companies, and they're equally happy to negotiate a reduction in rates.
They want the repeat business.
They want the repeat
Right,
business.
absolutely. You've done it
Yeah.
once.
And
You know?
so it's in some of the programs, especially if it's like what's called a streamline, you don't have to even provide income documents. I
Right.
mean, there are really some easy opportunities to reduce. And then also, because of our integrity and our honesty with our clients, if the servicer that they have has presented them with an offer, a lot of times our clients will bring it, and I'll look at it and I'll say, yes, that's good, or no, I can actually beat this.
Right.
But if it's a good deal, I had a customer recently that the servicer did offer her a refinance, and
Right.
she brought it to me, and I said, take it.
Yep.
It's wonderful. That is a great
And
opportunity.
that's coming from some folks that it's been a tough few years. We need loans, but it
I always
boils
wanna
back
do what's
down
best for the
to
customer.
what's best for the customer.
Sure.
Yeah.
Live or die by it.
But
That's
then
the way
I've
it has
also
to
had
be.
customers call me back where their servicer, because the servicers don't want to lose their book of business.
Sure.
So they're going to do some damage control before these refis off of them.
Mm-hmm.
So they'll
That's what they're
start to
doing
offer
now.
some things, and it was not a good deal. And I looked at her and I said, we need to wait. I said, this is not time yet to refinance. I said, we need to wait this out and let's see what happens in the next few months, because her loan was a large loan. Anything that we do is going to cost some money because
Right.
of title fees and things. And we want to make sure that we're getting her best shot, when we do it again.
Right. And we still we're still in the phase where these investors are protecting their bottom line.
Yeah.
Because when the rates went up so quickly, and they saw the writing on the wall, people are still borrowing at a 7 and a 7.25. Rates are going to come down, and they're all going to refi. So what did they do? Discount points.
Yeah, because they want to protect, because they've got some fixed cost that's in
That's
there.
right.
That they haven't even made
They're
up
going to
yet.
pay for that loan and expect to service it for 30 years. And if somebody refis in 3, then they've lost their
Lost money.
servicing money. So the way that they were making that up, and then people would come to us, you're closing. These are not my closing costs.
No, these are
This
not.
is I have searched. I've been through 7 different investors, and this is the best that we can offer.
And
Not
lately,
us.
what we've seen a lot of is bridge type situations where people are going to purchase their new home and then sell their old home, and they want to take that big lump of equity and do a principal reduction. Well, they don't understand the back end. Depending on that level of principal reduction, we then get charged a penalty for the early payoff. So those are conversations that are being had right now.
Right, we've
People,
had-
we've had 3 actually
I didn't know there was a
recently.
third one.
Yeah, I'm working with one right now, but where they were going to have like this lump sum. But as lenders who sell to the secondary market, if we sell them a loan that then pays off more than 30% of the principal within 6 months, guess who they're coming back for their money?
That's right.
Us. So we're really having to talk to customers and have guidelines on dates and things like that of when they can make that principal
When they can make
reduction.
that principal reduction.
And people don't know, you're going to get charged $8,000 if I pay this
I
off.
pay it
I'm
off
like,
too
yes,
early, yeah.
please don't
That's
do
a
that.
whole nother ball game with recast and things that I've never heard of one in my career. We've had 3 the last couple
You
weeks.
can
But-
recast your
but that-
mortgage.
That's like new things that are hitting that
Right.
people need to be educated on.
Absolutely. So
They think, well, why can't I make this? Because you contracted for a long-term fixed-rate mortgage,
Right.
and now you're paying it off in 6 months. So we need to have a conversation on a
about
timeline
right.
for that.
That's right.
Yeah.
Because
So where it
what it
doesn't
does is it
hurt.
cuts them out of the market, because it's just one of those things where people are not going to. If we were going to have to pay $8,000 for you to be able to do what you want to do, then I can't.
It doesn't
then
make
at that point, I
sense.
can't do that.
Right.
But then it's still a benefit for you, because we've done a good job for you. We set it out. We set some parameters, and people wouldn't even know what a recast was. I didn't know what a recast was.
Yeah, like one time in your mortgage payment, if you have a large principal reduction, you can pay a small fee and they'll re-amortize it. What a recast is a re-amortization
Without having to do a refinance.
without having
Without
to
having to
do
do
a
a
refinance.
refinance,
And
yes.
then you get the benefit of that affecting your monthly payment.
Right.
If you do a principal reduction and it's
The
not
payment stays the
recast,
same,
the
that's
payment
right.
stays the same. You just pay it off sooner.
That's right. And so people are trying to. So yeah. So I've never heard of that since 2014, and we've had
I've only done a couple.
3 in the last 2 months where
Yeah.
we have folks that are upgrading their homes,
Mm-hmm.
don't want to move out of theirs. They're going to sell it, have $300,000 to put down. So then you get to do what we call a recast. They put it on the thing, but they have to keep
Mm-hmm. But you
it
just
for a
have to wait
certain
for
amount of
6 months,
time,
yeah.
or they
Right.
have to pay the
fee.
So it's a great product. It's a great thing
But
to
that's
have.
all the more reason that we have to have great communication
That's right.
between all parties. I
Absolutely.
mean, if we're on the same page, and I can't stress enough to people, you don't ever want to lie to your lender
No.
about anything.
Oh my
Tell us
Your-
everything.
Your lender is your friend.
Absolutely.
We will find out, and it's at the most inopportune time.
And if you lie to them, it's going to surface.
It will.
It
and
always
it's
It
going to
always
be
does.
embarrassing.
It is.
And it's going to probably cost you something that it wouldn't have even cost you if you just told them up in the
That's
very
right.
beginning. We could have went down this path,
Right.
Right.
and you would not have hit here. So
I
never.
would definitely agree.
I mean, lying is never advisable under any
And
circumstance.
that's right. I would.
But I would say that you definitely don't want to lie to your lender.
No.
You want to be as transparent as you possibly
Tell
can.
us anything you're thinking.
Right.
If you're
Uh-huh.
thinking of changing jobs,
Yes.
talk to us
it
about
affects
that.
so many people, though. You have to understand these transactions. There are so many people involved: real estate agents,
Livelihoods.
the sellers, you've got inspections and title companies, and all of that stuff costs money. So you
and everyone's done this job,
That's
and
right.
then something comes out, and we're all like,
the ripple effect is just
It's
it's
huge,
crazy.
Yeah.
How many people
it's
it
painful,
affects.
especially when we go to do that 3-day before closing verification of employment and find out
my
that you've
goodness,
changed your
yes.
job.
So many things.
Or you've rerun credit and
Yes.
find out that there's a new Lexus.
There's a new
Oh my
Lexus
goodness,
on
that's
there.
the worst.
We've got furniture that's being delivered.
You know, one time
my
I
gosh,
made
you're
someone
gonna tell
take
the
their
same
TV
story.
back.
She sure did.
I did my refresh right before closing, and I mean, I'm telling you, we worked. It was a bank-owned property. I mean, a
Worked
really
so
really
hard for
difficult.
those folks.
And he went and bought a
That
big
poor
screen
guy.
TV, and I said, "Take it back.
I mean,
right now, you
when
take
I'm
it back."
telling you that when she raises her voice in the other, this is how close we are with our clients. I mean, it's to the point to where you'll hear
We have been through a lot for 6 months.
for 6 months, and you'll hear knockdown, drag out between us and some of these clients. So, but it all in the end works out to where, look, I appreciate you.
It's for
I
their
thank
their
you.
It is for their
benefit.
benefit. Yeah,
Absolutely.
I'm like,
But
you
that's when you
cannot buy
know-
furniture for a home you don't own.
That's when you know that you're on the same team.
Yeah, but that's where that relationship comes
Absolutely
in, to where
it
I
is.
can have that conversation. Like,
And they're like, "I'm
look,
so
it's like
sorry."
a shirt collar moment to where
Yeah.
we had this discussion.
Yeah.
Right. And I've
I
had
even make
too.
them sign something that say, "I will not get
yeah.
any new debt."
But that guy, he took that. I mean,
took it back.
literally had to take the TV back, get a receipt, take the receipt back, show it off the credit report. Blah blah. It was, but he got his house.
He did.
Yeah.
He got his house, and he was a happy guy. He really
They just
was.
don't. And we, I mean, really, we try to educate and tell them everything we possibly can, and then those little
Yeah.
things will happen. But we can usually figure out a way to get
Right.
around it.
Right.
Even when someone changes jobs, it may delay things for 30 days.
Right.
but
We've done
we're-
that before.
But yeah, transparency with us. Yeah.
100%.
Our job is to make it happen, obstacles and otherwise.
But we can't make it happen if we don't know.
Right. Right.
And then it always comes out no matter what. And then people have already spent money
Yeah.
and things like
It
that.
affects
and
the
then
lives of a
it's
lot of
worse.
people.
Yeah.
That's right.
It definitely does. Guys, look, we hit more topics than what I anticipated.
We can talk about this stuff
Oh
forever.
my God, we should sit here for
No,
days.
but I'm telling you, this is probably one of the more in-depth conversations that we've had about real estate is real. Real estate is emotional.
Yes.
Having quality people on your side matters. It's okay to get out and check rates. It's okay to compare rates. But just because somebody's willing to do something for a little bit less doesn't mean you're getting the best
Amen.
value.
Right.
There's a lot to be said with working with someone who knows all the rules to be able to offer the customer the very best opportunity for them and or their family to take advantage of. So,
Yeah, we want them to be successful.
Yeah.
well, guys, I appreciate y'all spending some time with us today to talk about the details, but this is not a scary process. And I don't want anybody to walk away
Oh,
saying
absolutely not.
that this is scary, it's too big for me to handle, I got too many problems, or I just don't want to be rate shamed by getting in where all my buddies have this. I tell that person, look, you're looking
That
at
is
it
your
wrong.
business.
You are losing so much money by not entering the market today because you're missing the benefit of all that appreciation.
Amen.
And you're not taking advantage of all that equity you already have.
And just let them, we want people to know we're walking with them.
Yeah.
That's right.
We're fighting the battle.
It's side by side.
As long as they're wanting to fight, I'll fight right beside them.
That's right.
And that a good local lender is connected within the community to where you have agents. Some of the best properties don't ever hit the market.
Right.
And
That's right.
when you guys have your pulse on the marketplace, you may know of things before anybody else does. So,
That's right.
end of the day, working local always pays off.
And working
in
as a
the end,
team is
Yeah.
a big deal too.
having that, I call it my success team of people that
Yes.
I refer business to. I want to work with people who work like I work and take care of people the way I like to take care of people. So
Absolutely.
you guys are quality people in our community. Thank you for what y'all do. You mentioned, Mark, that there's a lot of great and responsible lenders in the marketplace.
Right.
We want to use local as much as we
Absolutely.
possibly can.
If it's
Agreed.
not us, just use
Just
someone
stay
local.
local.
Yeah,
That's
stay
right.
There's
local.
a lot of really good
We'd
ones.
appreciate that.
Guys, appreciate y'all coming in
Thank
today.
you for
Thank you
having
for
us. We
having us.
appreciate
Man,
you.
it's been a blast. Thanks, guys.
Awesome.
Take
Thanks.
care.
This podcast is possible because of your support of our real estate business. If you're looking to buy, sell, or invest in real estate, I'm confident we have the tools and the processes to help you reach your real estate goal. For more information or to reach out to us, Check out the podcast description for our contact info.